Welcome to TradeTheMBI.com. This is John's reports for the 30th. Well, we got what we expected here. We've been in a short since, back over here when the blue crossed below the gray. We just waited for magenta to break underneath. It did. That happened over here. And it took a couple of days. We expected the 76 would not hold, nor the ABM. It was just a question whether the NASDAQ would be able to keep things up. It was a clear crossover here from the MBI white above red, and that usually signals a continuation of that move. The fact that we had rising gold was enough to mitigate it, otherwise, it would have been much more severe. And from an NQ standpoint, it did its job. It held things reasonably well and didn't even reach its 76%. Um, and the fact that we're still not seeing continuation or a crossover of MBI white over red, that's still keeping things from getting dramatic, if you want to call it that. I don't think that what we've seen from a decline has been all that significant. What you do have a recognition of is the bond market realized, oh yeah, hey, we're skewed and we're really like way out of line. And once there was selling, everyone was jumping into treasuries, and of course that caused a yield increase, and no surprise with that, because at the end of the day, this is way out of line with where things are, and it doesn't look like the Fed anxious to do anything, and rightfully so. There's nothing they really can do at this particular stage because there is no softening of anything. What we are seeing is, from a data standpoint, softening in the economy, barely just floating along. And of course, when people see the, you know, GDP numbers and things like that, they're going to be, reflecting on, is this going to continue or accelerate from a standstill decline standpoint, and particularly as we near election time, and of course, you get the Trump trial and things like that. Uncertainty, and uncertainty usually causes people to freeze in their economic activity, and when you already have a strained consumer, I think that's just a natural play. People just want to hold and wait and see, and that wait and see always causes disruption. So from an oil standpoint, a little bit of a fade back here, still within a soft patch with that. Of course, they've released, the petroleum reserves, blah, 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 blah. These are all short-term things, but the systemic issue of devaluation is going to continue to erode, and oil and commodities in general are going to rise from that. Also, the recognition in the Eurozone here that they're not going to be easing, relatively speaking, simply because they can't do it either. So it's going to be an interesting one, because now the Fed is getting into this situation where, they're damned if they do and damned if they don't situation, where they need to cut because it's very expensive having rates where they are, but to do so would make things even worse than they are. So kind of trapped in that. Gold easing off just a little bit within this short reset period right here. 50% should be able to sustain itself, though, given the readings, still pretty weak overall. But at the end of the day, you still have the same problem. Fine, you can be in the market to a point, but it's going to become very volatile and very difficult to keep things going within the range that they've been at. And it's going to start to weigh on a lot of people as far as where their allocations are at. From a Bitcoin standpoint, not really doing much of anything. All the excitement has been with ETH. After its big pushback up, fading off a little bit, people collecting some gains. Not a surprise going into an end month. So from our 50K standpoint, we can see that once the white crossed above both red and magenta, in this particular case, we began our decline move in there. We started a little retrace back above, but it crossed over again right about there, and then it was just a little bit of time that it took before white got back over magenta, and that was the final cue that happened middle part of yesterday. And you can see with that spike, it's just been a clear move straight down, and that was the early read on it. Nothing dramatic or major. It's just filling back. If we go all the way to the positive extremes, we got right about here is the last set of positive extremes. You can see from right there, and that filled back in the entire move. as expected. Just you have to wait for it. It's just a matter of the timing on it, and it continues to go. So that's what we're left with. Right now, we're in a continuation move on that. We look at it from an intraday standpoint. Most of the move happened early on, pushed back up, so this got rid of your puts. Call buyers that jumped in, they got faded later. And then here in post market, where they can't do anything from an option standpoint, we've been in a steady decline from the European session. And that's where things are going to begin. You'll probably see a little bit of a build back up now, getting back towards that break of the zero. So somewhere up in the 5260 range would be reasonable to expect. But it's going to get tough. And within month, you're going to have people clearing out and the rotation beginning. And of course, there's always the sell in May, go away. So no surprise with that one either. As always, know anything relevant, I will put it on the Skype chat. Have a good one. Trade well.